Welcome back to Make Money Online. Today we'll be looking at the state of the NIO stock price. Watch this video through to the end to know whether to buy NIO stock now or wait till a further dip in price. Stock volatility is a major determinant of the fate of many traders, investors, and shareholders alike. As in cryptocurrency, volatility is probably the best or worst thing that can happen to a company. A company's stock is one of the ways of evaluating the worth of the company in the market, and it trends depending on the events occurring in a company, whether they are good or bad. It's usually a worrying development for most investors who prefer a smooth ride to a turbulent one. Around the beginning of 2018, the volatility of the stock market suddenly picked up after a long duckout. As much as it sucks, volatility is a necessary condition for anyone aiming to reap massively off investment in stocks. That's where it's important to learn how to buy the dip. The idea is to purchase stocks when they've dropped sharply, anticipating that they will bounce back. Buying at a dip takes some courage, but it seems to work. The major idea behind buying the dip in stocks is to capture as many shares as possible at a lower price. This is what counts as an investment on the dip factor. Several opportunities to buy the dip for individual stocks are more common than you might think, typically occurring about 200 to 300 times a year for a group of 1,000 companies. The best way to make money in the stock market is to purchase shares of excellent companies that are currently undergoing a dip and keep them as long as possible until things turn up. What counts as a bad time for a company varies. Usually there'd be times when all companies experience a major economic meltdown, and thus all company stocks suffer. However, a single company's stock might suffer if certain events surrounding it are controversial enough to cause a dip. It's a pretty simple strategy for long-term investors who have developed the habit of maintaining a portfolio in tough times. Buying dip chips in on a stock's downtime, and the investor may hold out until he believes that something important has changed about the company. For example, new leadership that is inferior to the old, or a fierce new competitor that drives down prices, or changing consumer tastes that management can't adapt to. If you're offered several shares in a business and at a particular price, wouldn't you rather pay a low price than a high one for the shares? If you take the long view and you believe in the company, then you should love a low price. A dip in the stock of a company reflects that something negative has happened to the business. Imagine a company started trading its shares out at $10, but then it fell to about $5. But if you had bought on that dip, you would have suffered a big loss. This will be true if the stock falls further to $3 rather than bouncing back. There is always a good reason for the company's dip. NIO stock went public at $6 per share in September 2018. No stock was heavily bought by institutional investors when it launched. Its initial public offering stock traded well with decent institutional backing. Nearly a quarter or 24% of NIO shares are owned by mutual funds. 524 funds own the EV stock as of September, up from 347 in June. Since December 2019, NIO started accumulating share gains, and to date, the stock value has increased by an impressive 764%. NIO saw its stock price soar by almost 6 times year to date. NIO stock is also a profitable venture for investors more than its competitors because of its relatively low stock value, which is primed to surge in the nearest future. With the increase in sales of its products, NIO stock rose gradually as the years passed, and it rose even higher this year amid COVID-19 concerns. This year has shown us that some events that would cause the stock of a company to fall may not affect other companies. Majorly, all other companies were affected by the pandemic, but NIO and the rest of the EV industry rose in value in leaps and bounds. Many investors had sold their shares at the first sign of trouble for the company. Investing in NIO has proven over time to require an awful lot of patience. It didn't burst out as expected with the grand launch and the potential to knock Tesla off the pedestal. The first Chinese EV company sure holds a lot of significance to force Tesla into relinquishing its hold over the buck of the automaking industry. These expectations made NIO stock more valuable from the scratch. The more news that came about NIO inspired trust in the company's potential. Buying a dip of NIO stock at this stage is not necessarily a bright idea. Generally, when buying a dip, you look at the closeness of the trend to the bearish market. Traditionally, the stock of every company indicates a bearish market when its fall recedes to about 20%. This is the state of most companies, and there's an abundance of these companies. Some companies have hit the bearish markets and are still falling. The industry of the company also affects the stock of a company. If the industry suffers, they all suffer. After an asset's price drops from a higher level, some traders and investors view this as an advantageous time to buy or add to an existing position. When an investor buys an asset after a drop, they're buying at a lower price. These investors are hoping to profit if the market rebounds. Buying dips does not guarantee profits. An asset can drop for many reasons, including changes to its underlying value. Just because the price is cheaper than before doesn't necessarily mean the asset is a good value. According to this chart, the last black candle shows the current dip of NEO price as of December 11, 2020 at $41.96. After falling from the $54.39 high, it would be wise to consider the dip a good price to chip in an investment long-term. It may just not be the best, as the chart suggests a possibly new buy area below the support area of $34.83. Buying at $41.96 would mean that you buy even less stock than you would at the new buy area at $34.83. This chart shows the possibility of further dips in the price of NEO stock. It's unsure if the support level will break support under 40, next stop 38. But if it breaks out and goes up, maybe back to 43 or 44. The price trend of NEO is a downtrend with lower highs and lows. While it has the potential to rise, there's an equal chance that it may drop further, hence indicating that this may not be a profitable buy at the dip. A little wait down the line will lead to a lower favorable price to maximize the stock trend and anticipate a major rise in value long term. This chart shows the gradual drop in the value of NEO stock. This is a not-so-optimistic representation for those who bought at a higher price around $48. But it is totally good news for you as you intend to buy the dip. It's important to note that as of December 14th, the price had fallen to lows around $41.36. The red dotted support line shows the possible depth to which the price trend may fall at $40.69, and the blue line right below it at $36. Buying at either of these dips will be a better bargain than at $41.36. Those who bought it at $50 might be ruining their ill luck, thinking it was the perfect dip, but the current price trend will make them think they should have waited a little longer before ever trying. This chart shows the price's negative progression below the purple support line at $48.65, and then dips below the line at $42.51, and it's trending towards $38.33. Might be good news for existing investors, but it sure is not a bad thing for new investors looking to get a good look in on the market at the least price possible. However, you should note that it is not guaranteed that the price will stay the way it is. So you must keep an eye out on the charts and watch out for any news updates that will probably initiate and end the drop in the price of NEO stock. Once it sets up to a stable uptrend, you might lose the right buying price. It's important to note your stand. This is not something traders and short-term investors want to hear. They don't have the luxury of buying into market declines because they're not concerned with where the stocks will be trading several years from now. NEO has the potential to succeed in the next few years. An approach with a trader's mind will not make you see this, and such mistakes come. Dips or a price rise are known as a trader's loss. They bet that a stock will rise or fall. If it rose instead of falling, they lose, and vice versa. They're only concerned with whether the market, i.e. the price of their specific investment, will rally or decline over the near term, perhaps 1 to 3 days to 2 weeks, unless they receive a signal to buy. It swings both ways. Instant gratification is not a good weapon in the arsenal of a stock investor. Companies do make it big in the long run, but if you want to tap into that, you'd have to cultivate the art of waiting. Don't invest money that will put you under pressure to repay, for example, a high-interest loan. Technically, NEO stock has run up massively before slipping down into multiple buy zones. Some people have bought into it in the long run while there's no major buy zone, and more people are still watching out to buy its stock at a cheaper price. We hope you enjoyed this video. Please don't forget to give it a thumbs up, subscribe, and click on the notification bell. Watch this space for a more candid analysis of NEO stocks. What do you think will be the next step for NEO stock price? Let us know what you think in the comments section below. While you're here, go ahead and click on one of the videos on your screen. See you next time.